All right, here's Wednesday, December 27th. It's the last week of the year, so anything could happen. So let's talk about a couple things today. You can see right here is the morning session, and this is the afternoon session. So it just depends on what you're willing to play and understanding the rules. And I'll go step by step of how, in my mind, how I think about. Anticipating moves. And then you could be wrong, but I'd rather be wrong with a little bit of a loss than a big loss, right? You don't want to be chasing, you want to be anticipating by looking at price action. So let's take a look. So, first and foremost, the market's going to move the way it wants to move. So I have this trend line. We had this recovery from this dump last week, and they've recovered it. And Monday, they ended up breaking out of the high. That's why I have this line at 17,060. Why? Is because of this. This was the high of last week, and I think all-time high. So from there, you can see that in the morning, this is a 4-hour candle. They slowly chopped it around, like basically 20-point range, the 20-30 point range. And then right at 1 o'clock, or let's see, 1:30, they broke it out. You see this 30-minute candle, and then they ended up running it up. They hit the multi-day pivot and then rejected it. So that tells you that this has been a very important area. So you always want to make sure you have some kind of line there, because you'll see today how things play out. Ideally, what I was hoping for was a gap down below this line and then a drop into here, and then I was hoping for then a reversal back up to here, right? But again, you have to play with what the market gives you and just get in and have patience. At support and resistance. So what ends up happening? You can see that we open. So let's go back. This is a 5-minute chart with a 30-minute overlay candle. You can trade however you want, but I will say, out of years of testing out different things, 5-minute candles are the best. 1 minute's too quick. 3 minutes is still a little too quick. 5-minute gives you just enough data to really see those, like how the candles close. 15 minutes is too much, and then 30 minutes is great for the bigger picture. So if you can see that we opened up right here above, and we ended up shooting up and then coming back down, and then the candle closed back below this 110 area. And what's the 110 area? It is the multi-day bull pivot. That's why it's super important. Just trust me, you just don't want to be messing around with multi-day pivots, because they, on a bigger time frame, on the 30-minute or 4-hour charts, you'll see how it likes to play around there. And you can make a lot of money by just following certain rules at certain times around certain levels. So what do? We go up, and for 30 minutes we basically are just they're scooping it up. They're not dropping it. So you come back down, and they're not really dropping it. So this was just sort of a slow action that first 30 minutes. So when I saw that the candle actually closed above, that tells you one of two things. When you have a close above, then you have a potential look above and fail, and those are super violent. So what ends up happening was that first 5 minutes of the new TPO, the new 30-minute candle, they went up. Let's look at this right here. You see this line right here is the 110. They go up, and they got as close as they can, but they couldn't make it. And what sucks is I was anticipating this drop. I just the way price action was that first 30 minutes, they should have already gotten up here And then I would have assumed if they would have got up here that first 30 minutes, then yes, I would anticipate a pullback that next 30 minutes and then potentially just keep on ripping. But because it was a slow action, you see how these wicks, they're just selling them, selling it off up here. Um, that's what price action means. Whenever I say look at price action, what is the price doing in relative to these closing of these candles around certain areas? So you should start anticipating. So right here, that's why it's important, if you having like say one contract filling in and building your position, and then if it ends up breaking above, you get stopped out for a 10-15 point loss. But if you're anticipating the move for me was down here. And really I wanted to see a test of this area, which was resistance, and now it's support. It never really is tested it. Yesterday it never tested it. It broke out of it, but never tested it. You usually will have some kind of test, and then you want to see how the reaction is around that critical area, if they hold it or if they drop below. Because here they could have either gone up and then they could have shot back down, and that would have been a look above and fail, and then that would have been violent, and they would have came all the way down. But what ended up happening is they ended up dropping it and then finding support. Yes, we are there. This is the bull pivot, but you have to sort of take it with a grain of salt. Like it, I used to be so exact, like, oh, it has to go here and it has to go here. No, it doesn't. You have to look at the bigger picture, right? And that is going to dictate on a bigger time frame what's going to happen. Use this as a guideline. So for me, the fact that 30 minutes we are not pumping above, that tells me, one, we opened in the box. So when you open in the box, which is basically in between the bull and bear pivot, then you potentially for the day could have a consolidation in between those two, right? If we opened up above here, then you would be looking for a move to the upside up here. So again, you want to be as close as you can to support and resistance. So what you do is you got in. If you missed that entry, the key was this breakdown back below. And then you get in and then you hold. And if you do, it just kept on dropping. And that only took about 10 minutes to drop, let's see, 60 to 20, almost 40, about 40, 50, 60 points, something like that. Anywhere between, really on average between a pivot, these pivots, they're 50 points. So that's an easy way to gauge risk reward. So right here, like any day, all day, I would get in here, risk 10 points to a potentially 50 point move, or 100 point move. So 250s equals 100. So especially right here, you get in right here. This drops. You look for a bounce for a reload, and you get in right here because look, you see this candle 30 minutes is closing. So what do? You get in, and then you see how price action reacts around this, and you see how we're going down, they're bouncing up, going down, and then bouncing up. This should have dropped. This should have dropped quick. If it wanted to complete the bull to bear case. Other than that, this is where it gets really challenging. And so this was a very hard day if you weren't in tune with technical analysis and understanding how the market's moving. So the reason why I say that is this right here should have been the majority of your move. You take profits, don't get greedy, either put a stop. If you get stopped out, then you get stopped out. But we should never have traced this much. It should have maybe come down here, retraced, and then come back down. But the fact that it blew down and then retraced a lot, you see these wicks on these candles. So if you notice the next 30-minute candle, you see how it dropped and then wicked back up. And then the next 30 candle dropped and wicked back up. These wicks means they're buying it up on a 30-minute. They're buying it up. So you should anticipate that holding. So any drop, that should be your support until proven otherwise. Also, take a look at this trend. We are trending up. So if this would have broke and held, then yes, then you can anticipate the next move down. But until then, the trend is your friend. I mean, look at this on the 30-minute. All it's doing is, see how right here we came up too much, and then it came back into the trend. Came up. Now you're just consolidating into the trend line, and then now it's just sort of pushing itself either in a direction. So it's either got to go up or it's got to go down. So let's go back to the chart. So again, these are 5-minute candles. So all you can do is get in, and it either works or it doesn't. That's it. So let's look at the timing. So right now we are at 9:30. 9:30, here's the drop, right? We still haven't broken and made new lows. This should have started just flushing at 9:30. 9:30 should have had the next candle, but it didn't. They shot it back up. So now once you notice this consolidation pattern, you just have to wait. So this is the interesting part. You're stuck between a major level and a pivot. So you can see that it could either came out and then continued down into the 12:30 range and then made a decision, which that's what I was hoping for. But again, the market's only going to do what it wants to do. So don't be married to a plan. So what ends up happening was it ends up breaking out this way. What do? Once I noticed it broke back above, I went long. Okay, so I went long, had a short stop down to here, and it just wasn't moving. If this thing truly broke out and it was going to have some momentum, it would have already kept on going. But the mere fact that you see these 5-minute candles, there's just no movement. So I ended up cutting my position, then actually getting short right here, right? And so I was anticipating a failed breakout, then reversal. So it needed, if it broke right here and held, then this would have just started just dropping fast, right into the 12 o'clock. So if at 12 o'clock we were below this support, then 12:30 I would have assumed that we were down here. And then I was anticipating a drop and then a bounce, right? Again, I'm long biased, at least until proven otherwise. This didn't have enough momentum. So that's why it's hard. So right here, this is your support. This breakout, right? So if you look at your 30-minute candles, let's go back over here. That breakout is your support. Look at these candles. And look, that was also the high over here. But look, down, recover above it, recover above it. In the afternoon, recover above it. So that 70.75 is super important from moving forward. Even in tomorrow, that 775, basically what I would be looking at is moving this to like this. This zone is super important. If we break, it can come into the zone. Be aware they could pull it back out of the zone, right? But if we break this zone and you have a solid candle below this, you load up, because this thing is going to just start flushing. It could have another day just like this in the afternoon, where they ended up just flushing it all the way down to they actually went past here. So all right, so let's go back into the afternoon. Afternoon, this is what I'm looking for. So remember why I always say the 12 o'clock candle is super important. What do we end up doing? We broke down and then we're consolidating. But if this thing was going to have a fake breakout back below and then reversal, it would have started pushing fast. Like, you should not be seeing these green candles here. It should be red, 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 red. I mean, look right here. Red, 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 red. So the moment that you have a pullback and then you start to have this die down momentum, anticipate a possible reversal. So look what ends up happening. You see this 30-minute candle? It never closed below this this breakout. So right at 12 o'clock, what did they do? They ended up breaking it above and then immediately just shooting it up, 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 all the way almost close to the bull pivot. And then they shot it back down and closed it right here at 12:30 at the 110 level. Well, what is the 110 level? Why do I have this line here? Look at this. Remember, 110 was the bull pivot. So look at that. Shot up, could not close. So what am I expecting? I'm expecting that that's weak. I'm expecting a reversal move back down. I don't know when, but it should, right? If this was, I mean, that doesn't mean it can't come back up, which you can see it did. See, right at the next candle at 12:30, that came up, and this is when you want to be loading short. And that's what I was doing. I was trying to get it as close as I can because I hate getting stopped out, but really you want to be adding to your position for the short because 12:30, what's the rule? Are you above or below a pivot? You're below a major pivot, right? So now as I start seeing that these wicks are really consolidating, they're dropping it, going back up, dropping it, going back up. I drew this line because look, it's a perfect trend consolidation pattern. So anytime you have a push up, consolidate, if this breaks back below, it's screwed. So that's when you can add to your position. So you start and then add, and then you average, and then you know that it should not come back up. You either set your stop to break even and you look for the bigger picture. What are you targeting? Well, my target would be back down to the 775 because it showed that it's that is where the breakout was. So you want to take profit first there, and look, don't get greedy. Look at this. From 110 down to 70.75 is a 35, like almost up here would have been 50 point move. Two contracts, that would have been almost 100 points times two, $2,000, and this was on the span of 5-10 minutes, right? So you take it. Any push down into a level, yes, it could have kept on going, but be honest with you, the way this was looking throughout the day, how they were pinning it. So this is what I mean by pinning, as anytime you have a breakdown, a consolidate, a break up, this is now support until proven otherwise. Same thing. What did it do? Shot up, consolidated, broke. This is now resistance until proven otherwise. So this area right here, this right here, this is your area that you'd be playing in the afternoon. And sure enough, that's sort of what they did. It takes time to really understand, but what they end up doing is dropping it down, consolidating, then shooting it back up. And they didn't have enough momentum. You see that this wick, they then brought it back down, shot it back down. So you could have made a lot of points just playing this wave, but eventually you can notice that they actually were consolidated. They were not breaking this down. So unfortunately, this is what happens a lot of times, is you can see this is the last 10 minutes. Actually, this is the last 5-minute candle. And what do? They shot it from right this level all the way up, and they closed the candle above the bull pivot, right? These next two candles are the 10 minutes after market closed. So they ended up shooting it up another 15, 20 points right into the bull pivot. So it's so hard to trust in these levels, but when you do, they're amazing. Knowing when to actually get in and when to cut your losses. So you want to get in as close as you can. So anyways, so from there, so ideally this is where you should have gone at the end of the day if you were playing the end of the day move. You get in right here, you risk down below here, this level, and then you're aiming for the breakout. The bears failed breaking this down. They should have already done it by this time. So tomorrow what I'm looking for is this. Now that you have a break and close above, even though you have this candle, if we open below that 110 area, this could potentially drop pretty far. So it's Thursday, and so what could happen, you got to always have a plan, right? So if we open up below this 57 mark, that is now resistance. And a lot of times you'll see that happen in pre-market where they gap it below a major resistance. And when they do, you need to be, you need to be switching your buys, and it could happen really quick. They could open it up and then just start dropping, right? Or they can shoot it up and fake people out, then turn around, or they can recover it. So you just have to get in good areas. If you get stopped out, reassess. But this is where a lot of things could happen, or they could come back down right here and then continue upside, or they could gap this thing up all the way up here 50 points. And if they do, then I would be looking for at some point them filling the gap down here, and then that would be your Thursday. So I don't know what they're going to do at the end of the year. This was all-time high for, I believe, last year. So they could end up, this could be a daily look above candle, daily, and then they could end up failing it and then dropping it back down. And if they do, the algos could end up just doing what they did right here too. What's different about this day versus this day is this. If you notice, on this day, it was a Wednesday, they actually shot it up quite a bit. We were already well above the bull pivot. And you see this 4-hour candle. So in the morning, they shot it up, and then they consolidated, and these candles right here, were closing. And then the afternoon, this was a failed breakout reversal, and that's why it was violent, because once it broke back below here at 3, I think this was 1 o'clock, that's when it just started just capitulating on itself. And the moment it broke right here is when it just got, worse and worse and worse. And then they ended up basically retracing that entire day, or entire week. They overshot it, and then the next day, the Thursday, Friday, they brought it back up. So that's why it's different. So you always want to be on the lookout for these moves, because they can keep you off guard. But until proven otherwise, like this 70, this area right here is going to be my line in the sand. You have to be bullish until otherwise. Like any pullback, you have to keep going long, because see what they're doing here? Shooting down, pulling up, shooting down, pulling up. Yeah, always be aware of the 30 minutes. All right, until next time.